All right, and welcome y'all to today's chart review. Today was Monday, and Monday we had news. We had a bunch of red folder news at 8:30. So we had news at 8:30, and I'm not gonna lie, I took one trade today, and I'm not gonna lie, I did not expect this. I did not expect this big expansion move today on a Monday. I mean, I kind of could expect something, but I didn't expect us to sell off like we did. And this is looking very bearish in my opinion. Very bearish. I am confirmed pretty much bearish. And let's get into what I was looking at into the when we woke up. So I woke up kind of late today. I'm not gonna lie, I had like a late start to the morning. Usually I wake up and I go to the gym, but today, this morning, I woke up a little bit late. Wait, where are we? Okay, so I kind of want to see where we're at when market open. Okay, so this is what we're looking at. All of this. Once I saw this, I knew we were probably gonna get a good setup. All of this is just low resistance liquidity. This whole move upwards, upwards, upwards is just low resistance liquidity. Notice we have a low. We don't take it. We are just chopping upwards. I doubt that there was really even a London setup at all. Did anyone find anything in London, or did anyone trade London? Because I highly doubt that there was anything in London today. I really don't think that there was a single thing. So, oh, I was on the 1 minute. That's why. Dang, I'm all over the place. But okay, on this move upwards, what are we doing? What are we doing on this move up? Okay, we are hunting liquidity. We come up and around market open. Market opens around here. So around 9:30, right here. Opens at it opens at 9:30. Come up. We've hunted liquidity. My eyes were on this area. Right here, we have this 15-minute fair value gap here. And we also have this 15-minute BPR. If we look over to the left, we also have an imbalance overlapped with an imbalance. So I'm looking at this as a possible area in which we can reject off of. Look, we've come up, we've hunted liquidity here. We have also, like I was saying, rebalance to equilibrium of this range. And we also have an SMT at the highs. If you see, ES did not take this high, so therefore we have an SMT. So coming to the day, I'm pretty bearish because there's not really a reason for price to go higher. We also have all of these stacked lows below us. So I'm expecting to be bearish. I want to see a short, and all this low resistance liquidity kind of confirms that. Because I know, and we know, that there is much more of a reason for price to go lower and to hunt all this low resistance liquidity than there is for price to go higher and to hunt these highs up here. Like, there is no reason to be bullish here. I really don't think there was at all. Like, this was a clear day, and like a day like today is honestly a great day. I ended up taking one trade. I took a win today, and I ended up pretty much catching like the high of the day, and we'll kind of go over why that was. So come up, we have an SMT at the highs, and we're just waiting. We're waiting for price, and then right around here, market opens up. Let's zoom in a little bit. So we're bearish. No reason for price to go higher. And I'm just waiting. And then boom, market opens and we dump off to this low. Like ideally or realistically, I don't really see a reason to be in here. All this does is just confirm my bearish bias. Okay, we do come down, we dump, we take this low here. Okay, I'm not expecting us to take this low and then pump all the way back up. No, I know that we're going to take this low and we're probably going to rebalance price. Look what happens. We take this low, and look at where we come back into. Within this range, we come back into OTE of this range. We also come back into this breaker, fair value gap, and look at what happens whenever we come back into that breaker, fair value gap. I was looking for that, but if we go over to ES at the time, I thought ES was a lot cleaner. So this could have been your potential short on NQ, taking this off the breaker fair value gap and putting your stop at this high and then letting it run. Because if we look at this, let me pull up on ES because I thought ES was a lot cleaner. That's why I took it on ES. So look at ES at the time. We have equal lows. We have a 15-minute fair value gap. So even right here, I'm expecting price to at least go into here because we have this bigger bigger 15-minute SMT, and then now we also have an internal SMT. So anytime that we have overlapping SMTs, this can confirm that we likely don't need to go higher. And with all the bias and narrative written around this, like, I know that prices not need to go higher. So after this, we create equal lows. I didn't really see an entry here, but I did see an entry here. We create a fair value gap, and then I ended up taking a fair value gap, and then targeting these equal lows, and then this 15-minute fair value gap. An SMT is just a divergence between NQ and ES. So basically, say ES has come up and taken this high like that, and NQ is doing something like this to where we haven't taken this high. This can show us possible signs of reversal, which is why SMT is important. It can also show you manipulation. But basically, ES has come up and has taken this high, and on NQ, we have failed to take this high. So this shows you that NQ is weaker. NQ probably wants to go lower here, and ES has taken this high, so therefore, they're diverging. They're diverging. So they're not in line. So therefore, we're probably likely going to reverse. Anytime we have an SMT, I'm just looking for a possible signs of reversal. I don't think that you should have, like, if you look at an SMT and say, oh, we have an SMT, don't come to the market and say, oh, there's an SMT, I'm just going to short this. An SMT should just add to your already existing bias. So, okay, we come back in, and then we retrace back into that fair value gap. This was the entry that I had on ES. I paired the overall narrative on NQ with the entry model on ES. I ended up taking this. I took low-hanging fruit, which I think was good. I did not expect us to sell off this low as much as we did. Then we put on the sessions indicator to show you guys. We also had London low down here, which I think London low would have been a good target, which I let runners run. But I think taking short here would have been very nice. I think anything within here was a little bit too early. I like I was saying, if we look at NQ at the time, NQ was rebalancing to OTE of that range. NQ was rebalancing to the break your fair value gap. That would have been a good trade. Yes, we did take internal liquidity here, but that doesn't matter because of all this stuff around the higher time frame. Like, price isn't just going to take this low and then pump all the way up here, like I was saying. Price was going to take this low just to rebalance price and then dump back lower. So the fact that we took that internal low shouldn't have scared you, and we just end up really dumping. We end up dumping. The only other thing that I really like other than that short setup, like if you're in this short, I'm not going to expect, so me personally, how I trade, I'm not going to personally have runners all the way down, or I don't think it's good to have like runners all the way down here. Like, I just don't think it's, like, the market isn't going to make a 300-point move every single day, so why should I even be targeting that? Like, the fact that we had a 300-point move today is pretty hindsight. But we are bearish on the higher time frame. We are in that bearish market maker sell model. If you did leave a runner, I don't mind it. And I don't think it's a bad thing to leave a runner all the way down here. But I just don't think that that's really going to repeat. Like, if you're coming to the market saying, hey, I'm going to try to catch a 300-point move today, like, is that really going to repeat? Is that going to show up over time? And like, I took like a 10-point trade, or I took on ES. I got 7 points. I got 7.5 points. 7.5 points is all you need. All you need is 7.5 points consistently. And if you come to the market and if you target that every single day, if you're able to get 7 points, like, all you need is 7 points. You do not need 30. You do not need 50. You do not need 300 points, bro. All you need is 7 points on ES, and I would say like 20 points on NQ is a good target. But I'm not trying to target all the way down here. Yes, I have runners because the higher time frame is in line with that lower time frame. And this is what I'm saying. This right here is a model, is an internal model. It's also in line with that higher time frame bias. So on the higher time frame, price does not need to go higher. We have an SMT overlap with the internal SMT. So when the higher time frame shows us that we want to go lower, and if we drop down, if we zoom in to a time frame such as the 1 minute, and the 1 minute shows us that we also want to go lower, that's when we can drop down and have a 1 minute trade setup, and this is when you're going to get your large runners. So if you had runners, I don't think it was a bad thing. I was really looking for London low and this low hanging fruit. I took off most of my contracts here because I know that this will repeat. I know that this will happen over time. I know that this will consistently show up in the market. So therefore, that's what I'm targeting. You can target runners lower, but I feel like this is mainly hindsight. Had you target all the way down here and we end up reversing, you would have been in shambles. All right. So next thing, we have a drop lower, and now we have taken Asian low. This is Asia low. If you guys want to know this indicator, it's ICT Kill Zones and Pivots. It's by TFO. I would recommend this indicator. It shows you session-based liquidity, which I think is very important. You mainly want to be targeting session-based liquidity. The reason why I like this low so much, or the reason why I like targeting this low so much, is not the fact that we failed to take it, but also the fact that it is London low. It is London low. So if I'm taking a setup in the AM, I probably likely want to be targeting London low or Asia low. More often than not, it will be London low. Today, Asia low was down here. So once we take Asia low, I'm looking for a possible trade here, because I know at this point, price could possibly rebalance, and that's what we did. We have a 15-minute fair value gap up here that we could possibly rebalance into. We also could rebalance into equilibrium of this range, which you don't end up doing, but this is just what I'm looking for. So I'm looking for a possible rebalance in price. At the time, I was actually looking to trade this. We come back down, and then we sweep internal. We sweep internal liquidity. We also have just taken this Asian low. So this is a little bit lower probability. It is counter trend, but a rebalance in price is all that you would be looking for here. Okay, we come up. There's not really a trade offered. I was ideally looking to enter in off this breaker fair value gap, this breaker fair value gap here as well. This also is a breaker here, breaker fair value gap. I was looking to possibly enter here. I never got offered an entry, and I was just looking for this high because I know this high is probably going to repeat. I'm just looking for low-hanging targets. I'm not looking for this 15-minute fair value gap. I do think that price could rebalance to equilibrium of this price leg, because why did the markets move? To rebalance to equilibrium, to rebalance to inefficiency, and also to hunt liquidity. What would we be doing in all three of those? We would be hunting liquidity. We would be hunting this low resistance liquidity. We would be rebalancing to equilibrium of this range, and we also would be rebalancing to this inefficiency we have up here, because market pretty much rebalances from liquidity to inefficiency, and we know that inefficiency are liquidity. That's why you can target an inefficiency such as a fair value gap. So we come down, we sweep internal liquidity, and the reason why I think that this wouldn't have been a bad trade is because if we look on ES or NQ at the time, let me pull up. I have an indicator. It's called New Week Opening Gap, New Day Opening Gap. It's by Kryptonite. I would recommend it. But we have that New Week Opening Gap, and look at what we're respecting perfectly. Consequent encroachment of that. I don't really use New Week Opening Gap, but that was just like a little confluence I had at the time, and a reason why I think price probably got bought up here. So we sweep internal liquidity, and at the time when I was live, I thought that NQ had taken this high. I thought that we'd come up and taken this high. I maybe would have looking to take a trade here if I thought NQ had taken this high. But we never had taken this high. Again, you're just looking for the internal model. This is an internal market maker buy model. Look at what we have here. This is a market maker buy model. Clean as day. Clear as day. Come up. We put in equal highs. We know that price is going to probably come back to those. Also, what do we have within here? We have a breaker here. High, low, higher high. We have now taken internal liquidity. Internal stops. We have a stop rate here. We now have displacement higher. We're now holding bullish order flow. We come back. We retrace to. Hold up. Okay, my box is up here. Come back up into this breaker. Also in line with this fair value gap. Also in line with a fair value gap on the 5-minute. We also have a 5-minute fair value gap here. We also have a 5-minute order block here. Also have a 1-minute breaker block, a 1-minute fair value gap, and this was a good trade. This would have been a good trade, maybe possibly entering here off this fair value gap. Put your stop at this low. Put your stop at the order block low because we wouldn't want to violate this. Just targeting highs up here. I possibly could have taken this trade had I seen that we had left equal highs, but I really thought that on NQ we had taken this high. So I think this was a good trade. I was trying to look to take this trade, but I already took my trade for the day. I already took a win. I was already up on the day, so therefore I'm going to be a lot more picky. But I do think that this would have been a good trade. This is a clear internal market maker buy model. What is a great on TradingView? Do you use the option? Yeah, I do. I do JLB. I took the same trade, but on NQ. I like the fact that NQ was in a fair value gap. DXY was so bullish at the time for me. This was A+. Yeah, if we look at DXY at the time, I don't really, honestly, I'll in the future, I'm just going to look at DXY and see, like, obviously, if I'm looking for sells, obviously I want to see DXY be bullish. And if I'm looking for buys, I'm looking for DXY to be bearish. But I'm not going to be, like, intraday, like, looking and managing this so much. But I'm just going to, like, slightly glance at it. But a while back, I said that I'm going to use DXY a lot more in my analysis. But other than that, I don't really love another trade. Like, obviously we're bearish on a higher time frame. I'm not expecting like a huge sell off. And once we take Asia high and low, or once we take Asia and London low, everything after this is just a little bit lower probability. Once we take this low and then this low, everything after this is probably not going to be as clear. And as we see, just wasn't super clear. Like, maybe a potential short here off this fair value gap. But I really don't like it. I really don't like anything. Like, price is already run. There already was a trade offered. I think that you just take that trade and then you just go on. You just trade that trade and then just go on. ICT method and all you get is 7 points. I don't understand. Is it supposed to be a great way to trade? ICT method, all you got is 7 points. Oh, I don't know. All you need is 7 points. All you need is 7 points. All you need is show up in the market and find something that repeats. That's all you need. You don't need, this is such a, trading is such a leverage-based game. Like, all I need is 7 points. All I need is 5 points. I could literally come in the market and I could get 2 points every single day. But if I have confidence with that and that repeats every single day, that's all I need. If I can show up and if that repeats, bro, that's all that matters. Like, don't think that you need to have like a 300-point move. No. You just need a 20. I would recommend probably like 20 points on NQ and then 5 points on ES. That's all you really need. How do you find a breaker block? A breaker block is a high, low, higher high. It's an order block that gets broken through. So right here, this is an example of a breaker block. Right here, we have a low, high, lower low that we break through. If we come back into this would be your breaker block. As you see, we don't really come back into it. We kind of just sell off. But it's pretty much an order block. So normally you would expect this to hold as an order block. Normally you would expect this to hold as an order block. So like if we're bullish, ideally price would come back down to this and we would support. We would go higher. But we've broken through this and we now use it as an inverse. So a breaker block, it's pretty much just an inverse order block. I found that I found that out. I was overcomplicating breaker blocks at the beginning, but it's pretty much it's an order block that gets broken through. So as we can see, that's what that was. Breaker block, low, high, lower low, low, high, lower low. And ideally with breaker blocks, you want to be taking liquidity with them to make them higher quality. I would recommend you look at more videos. And breaker blocks are going to be confusing at first, but the more that you see it happen, same with ICT concepts, the more that you see it happen, the more that you see it repeat, the more it's just going to get drilled into your brain. So you would place the end of each candle as the breaker block. Like, would I include the wicks? I include wicks on breaker blocks. I mean, technically, you could say this would probably be the more defined breaker. This probably would be the more defined. I'm pretty sure it's the last down closing candle. I would honestly recommend a video. I would recommend like any ICT concepts. I would recommend just like watching a video on T-Trades. T-Trades explains it well. And also there was a video I watched by ICT himself. It's like advanced breaker blocks. I would recommend watching that. But I would recommend watching T-Trades advanced order blocks or simplified order blocks, and then I would recommend watching ICT's advanced order blocks next. Just like kind of see it happen over and over, and just like come to your chart and just mark out breaker blocks. Like that's the best way you're going to learn PD arrays. Like the first time, I had no clue what a breaker block. Like I thought like anything was gonna be a breaker block, but just mark it out over time, and then over time you're going to see it repeat, and you're gonna see like, oh, this is the order block, this is the breaker block. That's what like a lot of ICT concepts. Like it's gonna feel a little bit strange at first. It's gonna feel a little bit weird at first. It's not gonna feel comfortable at first, but once you just mark it over and over and over again, that's when you're gonna get that's when you're really gonna get locked and dialed in. All right, I really don't have much else. We're gonna go over my bias, kind of going into this, and this actually does look interesting. So if we look throughout the rest of the day though, like I don't really like anything after this. Like draw gets met, we're clearly bearish. I would just like if you have runners, you probably got paid today, but personally, I don't like to have. I like to catch what I'm comfortable with. With what I'm confident in. Like I didn't necessarily think that price was gonna sell off all the way down here, and as you can see, y'all, this is clearly bearish. This is clearly bearish, y'all. We could have some good trades in the upcoming weeks, but I'm gonna stay patient and I'm gonna let the market show me what it wants to do. So if we zoom out to the higher time frames, let me kind of clean up my charts. Let me kind of clean up the charts. So if we see, like, we are clearly bearish. We keep on displacing. We're keep on displacing lower. And this is clearly sell side of the curve. We now get displacement through a low. We've now gotten more displacement. Notice how every one of these moves has just been a sharp move lower, Like, there hasn't been too much consolidation within this market maker sell model. It's kind of just been a pump, dump, pump, dump, pump, dump. And that's exactly what was happening. We were pumping, dumping. And if we look, for me, my eyes are at these lows here. I want this to become the draw, and I believe that this is the draw. I don't think the fact that we got displacement lower now, I don't think that we're really going to stop. I could see us possibly stalling here. And why? Because on NQ, I could see NQ coming down and taking this low. So going into tomorrow, my draw is going to be this low. Going into tomorrow. Since we're so close to it, in the overnight session, we could come down and we could just take this low. If we come down and this low is taken before I wake up or when I wake up, I'm going to be a little bit more hesitant to really take anything, and I feel like it's just going to be a little bit less quality. So if we open up and we have taken this low, I think that it's ideal to be a little bit less or a little bit more cautious. But as we can see, like, this is the prominent low. This is the low that we have been targeting on NQ. We also have a daily fair value gap here. That's also the draw. So this kind of will tell us all. How do we react after taking this low? This could be the higher time frame turtle soup. We come back down and then we head higher. I highly doubt that because ES and YM are clearly bearish. So we could come down here and we could immediately pump back up. But I want to see how we react off of this. Do we displace through it? Do we break through it? Do we use this as a higher time frame turtle soup? What are we going to do? But the clear draw becomes here, in my opinion. This also is the daily fair value gap. So there's added confluence for us to head lower. Like, we're clearly bearish. We're clearly displacing through lows. We now have this big 4-hour fair value gap. This now becomes your breaker, or this would be your breaker. And it's not I'm not going to use a breaker. It's not the cleanest, actually. This would be your breaker. This is more accurate. So this now becomes your breaker. We'll see what price wants to do. If we wake up, we have taken this low. I'm going to be a little bit more cautious. Ideally, I would like to see us come back up within this range, probably within this fair value gap here. Maybe all the way back up into this breaker. Ideally, I want to see us retrace into equilibrium before then heading lower. Kind of do what we did today. But just the fact by looking at today, I would expect the order block, or I would expect this to sell us off lower. So we'll see what happens. More bearish, or obviously clearly bearish. And let's look on ES. So draw clearly these lows on NQ or on ES. This is the daily fair value gap here. This also has an order block line within it. So this order block is that low here. So we're obviously going to head to this low. How do we react off of this? Do we displace through it? Or are we going to come back, sweep this low to then rally higher? We obviously on NQ, if we zoom out to the higher time frames, we have this stacked liquidity up here. So I can see it's coming back up here, but we don't necessarily have to. Like we have SMTs. So therefore, I don't think we have to. We look on YM. We're also within a clear market maker sell model. Target was this low. The next target, the next draw for me could possibly be this weekly fair value gap on YM. I don't think that we need to come back to here straight away. Like, I don't think it'll be a clear dump, but just something to look out for. So anyways, my buy is going in tomorrow, plain and short. If we take this low, I'm going to be very cautious to really take anything. Ideally, I would like to see us come back up within this range to then head lower. So we'll see what happens. You think it's going to break 5077? 5077. Sorry, I don't. 5077. Am I tweaking? You'd have to show me or are you talking about ES? Sorry, you're probably talking about ES. I think, obviously, the market has to show me, but I think there's like a war going on. I don't know. I don't really check the news, but I'm pretty sure there's like a war also going on. And we also have election year. I think this could be something to brew us up in upcoming weeks. But I'm not gonna count on it. I'm gonna be patient. I'm gonna let the market show us what it wants to do. But right now my eyes are clearly fixated upon this low. The draw for me originally was this low. I want to see how we're gonna react off of this low. As you can see, we took it, we pumped, and then we dumped. So, or we didn't pump, we retraced, and then we dumped. So this reaction off of this low tells me that we do want to go lower. If we wanted to go higher, we probably would have taken this low and then rallied higher. But if we look on NQ, I feel like NQ is going to take this low, and this will be a more telltale all. I feel like we could possibly take this low, then come back up and pump, and not pump. Sorry, I keep on saying pump and dump. I don't like that. But we could take this low and then come back up, slowly work our way up. It all depends. Like, I'm not here to predict anything. I'm not here to like put a prediction. I'm here to see what the market gives me, and I have a bias and a framework around it. And ideally, the best setups I'm gonna get are when my bias is clear. But right now, bearish for sure. With that being said, I don't really have much else. I thought the price action was decent today. I really think that there was a few opportunities. I really liked that short that I was in. I thought that was your best trade today. That was your A+ setup. Other than that, the rebalance in price here would have been a good trade. I might have taken that trade had I seen that we had created equal highs on NQ. Other than that, I really don't think there was anything else that was very high quality. We just ended up dumping today. And days like today, when we do end up dumping, and say you did take a short like me, I pretty much caught like the high day today. Okay, cool. I don't care. That doesn't mean anything. Like that's just a trade. Like, yeah, you can look back and you say, yeah, I could have had runners that could have ran. I could have made so much money, bro. All I did was target. If we look at ES, all I did was target London low today. That's all I did. I took this, and we ended up dumping out all the way here for the rest of the day. Cool. I don't care. I got my low hanging fruit. I got something that's gonna repeat. Looking back, like saying, "Oh, I could have held. I could have made so much more money." I don't even care about that. That doesn't even pop up to my mind. I don't care because I know that it's likely not going to repeat. And the thing is, just find something that repeats. Find something that makes sense to you. I thought PA recently has been clean, and PA recently has started to clean up because we are within this clear market maker sell model on the higher time frame. Like, this is clear that we're selling off. So we know that the external draw is lower you know that the draw on the higher time frame is lower, so that's when we can get our best setups. And that's why I think today was such a good day, because higher time frame draw was lower, and all of this low resistance liquidity was built up in that London session, to where we just got to come into the market, get displacement lower, fair value gap, boom. And it was just a nice day, clear day with clean, concise price action. And that's all I have for you guys today. I appreciate you guys as per usual. We'll be back for live trading tomorrow. That's when I'll be live next. I appreciate the love and support from you guys. The support's been crazy, and like, we're just gonna get better. I'm just gonna become a better trader, and we're just gonna continue to become better. Would you consider a market structure shift on the daily chart has been made? Yeah, clearly. Yeah, I would say yes. So I would mark. I would say market structure shift definitely here. This now becomes your higher time frame market structure shift. But I don't really use the daily chart too much, because I really care about the 1 hour chart a lot more than the daily, because I think the 1 hours and the 15-minute are your bread and butter. I think the 1 hour 15-minute should be your bread and butter. I don't really use the daily chart too much, and I don't think you really need to if you're trading intraday. But obviously, if it works for you, I think that you should have a top-down analysis. I think you should have a top-down view. So I think the daily chart is important, but I don't think it's as important. But anyways, I'm head out of here. Hopefully y'all have a good rest of your day. Hopefully y'all have a good rest of your night.